Imperial, Supergroup, Bala World, Grindrod and Bidvest are some of the JSE-listed companies that transport goods around the country to bring them to our doors. But in a tough economy, which offers the best value? To drive through these companies, I'm joined by Kerry Fynn, who is the CEO of Alphawealth, and Wayne McCurrie from FNB Wealth and Investments. Gentlemen, thanks so much for your time. Now, we do know that the economy is in a very hot spot of bother, and it's specifically the production side of the economy which many of these stocks and companies are facing. I'm really interested then to find out from you if there is any value to be had in the transport and logistics sector of the JSE. Wayne?
Look, the transport and logistics, along with many other sectors, depends primarily on your view of what's going to happen over the next 3 to 5 years to the South African economy. If you think there are better times ahead, remember, it doesn't have to be good times, it must just be better than where we are now. A lot of these shares do show value. I mean, certainly Bidvest, we own Bidvest and we would be even bigger buyers of Bidvest. But the same applies to the banks, the same applies to the retailers. Many sectors in our economy are reflecting the tough times. So if the tough times stay, then the shares don't do anything. But if the economy improves a little bit, then the shares will go up because they are actually at quite low valuations. But it's primarily dependent on your view of the economy. Just coming to the logistics now, I mean, logistics is only going to grow and grow as you get more online sales. I mean, you look at what's happening in the UK, a lot of the department stores and everyone's battling there because of online sales. I mean, it might be 20% of the market already. And all of that is warehousing and logistics. And these companies serve straight into it. So the longer term outlook is actually quite positive. Grindrod's different. That's not really a South African logistics company, but certainly Imperial, Bala World, Bidvest, etc., Supergroup do serve the SA logistics industry.
All right, and Kerry, for you, I mean, this sector, is it really dependent on the view that you're taking of the economy? Do you think it is offering good money right now for investors?
Thanks, Fifi. Yeah, we feel the same way as Wayne. I think it is cheap at the moment and it is geared towards a sort of a very cyclical economy, which is not in great shape or struggling at the moment, as we know. Just to add to what Wayne says, I think that one of the additional angles is some of the local companies have quite large foreign earnings. So Santova is one that stands out for us. It's a small business, obviously sort of small cap, kind of heading into micro cap territory as the price has fallen. But I mean, you've got a business like Santova on a multiple of 4.5 and it earns 2/3 of its revenue offshore. So I think there are some quite interesting South African logistics business doing some quite interesting things offshore. And of course, there's Africa growth as well, which we need to chat about. I mean, it always amazes me at how many of the African countries are growing at a rate of over 4% per annum. South Africa, obviously, unfortunately, not included. But we are a springboard into Africa, and there is an opportunity for some of these businesses to make some strong headway into Africa.
And are many of them taking that advantage? Because also, you know, traveling to the rest of the continent, I mean, the roads are not that great. I mean, there's issues around security. Are many of them going into the rest of the continent for value as growth here dwindles to next to nothing?
Definitely a tough place to operate in, but I mean, coming back to Grindrod that Wayne picked up on, I mean, so if you look at what they're doing in Mozambique and some of the port revenue that they're generating from that, I think again there are opportunities, but it's not for sissies, as they say. So very, very difficult for these businesses to make headway in Africa, but it's coming off a very, very low base, so they can grow earnings quite substantially off that.
Let's talk stock picks here, Wayne. You did mention the fact that you like Bidvest and you're wanting to buy more of Bidvest. So and unpack the investment case for Bidvest for us. What exactly are you buying here?
Bidvest, at the end of the day, you're buying a long history of good management of the company. So even though the outlook might not be exciting at the moment, you're buying a company that's been around forever. You know, it's never really had a major disaster. Balance sheet looks quite sound. Cash flow looks reasonable. I know they're going to expand, continue to expand overseas, but if there's any form, just about every business in South Africa has a contract with one of the Bidvest companies for distribution and logistics and just general running of your company. So they provide a lot of that.
We've seen the reaction to that on Twitter from some people who think that, Bidvest has got too much control in South Africa's economy, but continue.
But look, that certainly is the case. I mean, another sector we must look at is the property sector, because a lot of properties have got big industrial exposure. Now, industrial exposure in South Africa has actually got nothing to do with industrial. It's all warehousing and distribution and logistics. And that's been the best performing sector of the property sector now for a number of years.
Kerry, Bidvest as appealing to you, or for you, would you also consider the like of, the Bidcore, which was spun out of Bidvest a few years ago?
We prefer the smaller, faster growing businesses, although, as Wayne says, I mean, Bidvest is pure quality and management is great. But I think an interesting thing about this freight and logistics sector, the transport sector, is that a lot of these businesses have excellent management and have been around for a long time. You look at Santova is 20 odd years old. Value Group, I think, is probably 30 odd years old. These are small businesses, but they've done very well to compete and manage costs in very, very tough times in the South African economy. Supergroup, another one with excellent management, where they've managed to pull that business back from the brink, I think more than once, and now seemingly are doing very, very well. And this tough time is giving a lot of those well-run businesses the opportunity to make acquisitions and grow organically quite smartly in this environment. So again, I'm not super optimistic about the sector, but at the prices that it's trading at the moment, it seems interesting. Just one thing on the Grindrod stock that's on our radar is that Grindrod preference share as well. I mean, you're picking up 11.2% yield on that preference share. And I mean, the price has been pretty stable and solid. Not huge volumes from an institutional perspective, but very, very interesting yields in a business that's managed well.
I mean, Wayne, just staying on the smaller guys in the sector, maybe the likes of your Supergroup and the Grindrod, I mean, do you find these stocks appealing, especially like a Supergroup, which like many other counters are quite diversified, right? So yes, they transport a whole lot of things, and maybe this acts as a buffer when things are tough in one sector?
Look, normally this is a relatively defensive sector, because whatever happens, you've got to distribute your milk and your bread and many other things. So it's normally is quite defensive. Of course, it's affected heavily by a weaker rand and by a slowing economy. But it's not at this juncture. I would rather buy the banks and some of the retailers. I think they are better value companies and will probably respond quicker to any economic upturn when it happens. We all hope that it does happen at some stage. But the valuations are not bad, yeah. Grindrod, I'll be a little bit cautious on, because they took this foray into Mozambique and the last set of results didn't look good. Admittedly, it was very messy because they were spinning out the fuel business and the shipping business and many other businesses which are not continuing businesses. So I would maybe sit back a little bit on Grindrod, but certainly our pick in the sector, as I said earlier on, would be Bidvest.
But I must say, I mean, Grindrod coming out with its results last week, and management seemed quite upbeat on the rest of Africa opportunity. In fact, Mozambique, to be specific. Imperial, would you be buying Imperial at current levels?
I would prefer to pick Bidvest, but Imperial's obviously been around also forever.
Why the preference of Bidvest over Imperial?
I think it's just a valuation story.
All right.
Pure valuation story.
So you say Bidvest offers better value for money.
Yes.
Your take on Imperial, Kerry?
We'd agree with that. I think it was a good move spinning out Motus from our perspective, but we would back Bidvest over Imperial at this point as well.
So if you are wondering, okay, exactly what you guys are saying, you're saying that if you're looking at Imperial, better not to buy Imperial if you're wanting to go into this sector, you'd rather pick up a Bidvest.
Yes.
Understood. Barloworld.
Barloworld isn't that geared to logistics per se. It's a lot. It's to do with the economy, really. And some parts of it are in fact quite good. The overseas operations seem to be doing very, very well. So they've got massive overseas operations. They've closed down their Iberia section that they struggled with for forever. But the other overseas operations are actually doing quite well. And in South Africa, the one good thing is the mining sector is doing well. So they should get some capital sales from that. But it's not as diversified, certainly, as what Bidvest would be.
So but you're still sticking on Bidvest. Kerry, your take on the likes of a Bala World. I know a bigger player and your focus is more on the smaller players, but Bala World, your assessment?
Yeah, I think we'd agree with that. I think hopefully the pickup in some of the mining activity, and you're starting to see that coming through in some of the results, or Northam sort of out with record results. Obviously, Exara's results not so great, Hulaman's results not so great for all sorts of reasons, but there definitely is a pickup in that space. And Barloworld have struggled for a while in their Caterpillar division, for example. There's sort of yellow metals division been a tough place to be, but hopefully with the pickup in the mining side, Barloworld will see some action out of that. And again, very big, solid business.
I mean, just to wrap up, Wayne, you mentioned the economy at the top of the conversation to say ultimately these stocks are geared to, you know, what happens in South Africa's economy. If, like what is currently happening right now, the economy continues to underwhelm. You mentioned your asset allocation being a preference to your banking stocks as opposed to logistics players. Would you, if the economy continues the sustained period of weakness, the question is, do you continue to hold these guys and wait out a little longer, or you move your money out of the sector and go elsewhere?
Our view is things will get better. We're not saying things will get great, but we hope, we pray things will get better. If that is the case, then this sector will do well, but we'll prefer some of the retailers, especially the food retailers and the banking shares. If we're wrong and the economy just stays where it is or maybe even gets worse, quite frankly, you just want bonds and cash. You actually don't want to own any shares. I mean, obviously we can't own any shares, but it would not be your preference at all.
At all.
Because no matter what the valuations are, if things get worse, these shares are not going up.
No, for sure. And Kerry, finally, your asset allocation in these times, I mean, continued period of weakness for the economy, do you stay here, particularly in the small sector of the transport and logistics companies, or do you also rotate elsewhere?
I think what's important for us is to look for businesses that are finding ways to grow earnings and generate cash, even in the face of a tough South African market or weakening rand. So as I mentioned earlier, Santova is one of those with 2/3 of its earnings offshore, but generally running off a South African cost base. Australia, UK, some in Asia, same with Supergroup, almost half of its earnings now international or global. Again, the weakening rand sort of obviously helps them. Import costs, fuel, etc.
But they're also facing quite tough times globally.
Sure, absolutely. I mean, but it's a diversifying. If you, as Wayne mentioned earlier, if you have to hold some shares in an equity mandate, for example, you know, so our two picks at the moment in our portfolio are the Grindrod pref share, just because it's stable and very, very high yielding, and Santova just because it's so cheap and we like management and we like where their earnings are coming from.
For sure. Gentlemen, thank you so much for your time. We will leave it there.